What advice would you give an aspiring investor who's 6 to 12 months behind you?
Number one is to look at where you want to be in 10 years and
Hmm.
work backwards from there. I think a lot of people go at it kind of chaotically and they don't really think, they think, oh, this will be fun to do. Let's try this. Let's do this. And they don't really connect the dots as to where that's going to lead them. And the second piece of advice I would give is that don't speculate. If you're
Hmm.
trying to get into investing, focus on cash flow. You hear it all the time, take action, take massive action, get out there and just do it. That's great. And I think that's good advice. But at the same time, don't get consumed with that idea that you just got to go out there and just take this big risk and hope it all works out. You got to educate yourself. To a marketing department, because most businesses who hire for marketing want people that understand the product and the customers. Since I'm right out of college, I didn't know how to really relate to that. So the natural progression was to get into sales. So that's where I
Hmm.
spent my 16, 17 years
Hmm.
of my career in various roles. But the back half of that career was spent in medical device, capital equipment sales. I was selling equipment to ophthalmologists who did cataract surgery in the operating room. So
Hmm.
I did that up until 2019. And that was 2 years ago when I left full time to pursue real estate.
Nice, nice. And it's funny you say, when you're in college, you never know what you want to be when you grow up. But I've joked around a lot. I've been in the military for 20 years, and I've said this recently that when I realized that I wanted to be a full-time real estate guy, real estate investor when I grew up, that's when I decided to finally leave the Marine Corps. So anyway, several years in sales. I know medical device sales. One of my partners spent a lot of time in medical device sales too. So it's good, solid profession. And quite frankly, you're always selling. And I think that's going to be something that is going to pay dividends, in the real estate business. So you decided to leave full time to do real estate. Did you have any real estate as like a side hustle prior to, or was it just, hey, I'm stopping this and I'm starting that? Tell us how that transition went.
Sure. Yeah. I guess I had a little bit of experience, but not anything substantial and not for a very long period of time either. I really didn't have time, to be honest. I mean, that was one of the big reasons I left my career, was because it just got more and more time intensive, and
Yeah.
it was taken away from some of the other priorities in my life, like my family, my health. So the last year I was in that career, I spent 80 nights in hotels.
Hmm.
I was on the road all the time. A lot of times there were dinners at night, and there was a few bottles of wine had with customers, et cetera, et cetera. So it was just go, go, go. And there wasn't a lot of time for real estate, but I had always been interested in it. I wanted to get into it. And it's
Hmm.
really when the why became more apparent and more acute that I decided that I didn't have a choice. Time, you can always make time if it's that big of a priority. And at that point, it became that big of a priority. So
Yeah.
I initially bought a duplex in the beginning of 2018. It was tenanted. It was an older property. So I got some good
Hmm.
experience there in dealing with tenants, leases, maintenance issues. This property was built in 1920. So I had regular phone calls. There was deferred maintenance on it. From there, I bought a single family home at auction that was
Hmm.
in pretty rough condition, and went through my first full rehab and working with contractors directly, which was a big learning experience. And a lot of mistakes were
Yeah.
made, and it was agonizing at some points, but it ended up working out really, really well. That property I bought for $55,000. I put 30
Hmm.
into it. I filled it with a tenant for 1,200 a month. I refied it. It appraised for 145. So I got all my money back
For
in about
solid
20,
numbers. Yeah.
yeah,
Wow.
20 something K in addition. So that's when kind of a light bulb went off that,
Hmm.
wow, first of all, that was a really scary experience with a lot of learning lessons, but here I am standing and I did well with it, and I still had fun, and I wanted to move forward and do it again. So is there something wrong with me here?
Yeah. And that's a definite light bulb moment. I just got to ask you a question. I mean, that's what most people refer to as the Burr method. Did you
Mhm.
know that going in, or did you just kind of figure that out along the way?
I did know that term and I was familiar with it. I was kind of a bigger pockets podcast junkie at that
Okay.
point. I had analysis paralysis, I suppose you could say, for years when
Hmm.
it came to real estate. I always thought that, because I had no experience in contracting myself, I had no experience with leases, I could get sued.
Hmm.
It was always the worst scenario that was in my head that was probably going to happen. It
Yeah.
wasn't about what could happen that could go really well. It was always the worst, and I was going to have a total loss, and make this investment. I pay cash for it, and it just disappears overnight. Well, the fact of the matter is that real
Rarely
estate,
happens.
It rarely happens, and it's really difficult to make a big loss like that in real estate. All you have to do really is, if you make a mistake, let's say you overpay, is you just maybe have to wait a little bit longer to get your
Hmm.
money back. You're going to collect rents. You're going to probably participate in some appreciation.
Yeah.
So at the end of the day, it really is just about going in and taking action and trying to learn. And you're going to make mistakes, but that's what I found was that, I learned a lot from that flip. I learned a lot from the duplex I bought. I wanted to move forward, and I thought, well, hey, you know what? This is obviously not going to provide, a supplement to the money I was making in my medical sales career.
Hmm.
But if I focus full time on this, there's no better time to take a chance on myself than
Yeah.
now. So let's go. Let's see if we can scale this thing. I was obviously, like I said before, really not enamored with the fact that I wasn't around my family as much. We were about to have our third child. My wife works a full-time job. Life was just getting too stressful and my priorities were out of balance. So I
Yeah.
thought, you know what, if this doesn't go well and this isn't the right decision, I could always fall back on my career in a couple of years and go back into medical device.
Hmm.
But that hasn't been the case. And I'm actually, I'm thrilled I made that decision, and things haven't panned out the way I necessarily mapped them out. Uh, I'd say they panned out better, and it's just been a
Yeah.
different direction, but it's been fun.
Yeah. And there's a lot of things in there that I want to unpack. But the first thing is, I always like to ask everybody about their big burning why. And you've talked about family, you've talked about time away and everything else, which I think resonates with a lot of people. But if you could distill that big burning why down into, one or two sentences, what is your why?
Well, I think uh, there was a specific evening I spent in a hotel room
Hmm.
where I had just gotten back from a dinner, and I was kind of sleepless that night and was thinking about, what's my life going to look like in 20 years when I'm retired? And at the pace I was going, I thought, well, I'm going to be probably pretty unhealthy.
Hmm.
I will have missed my kids growing up. Hopefully my wife still loves me and can tolerate
Hmm.
the fact that I was never around. And I just didn't like the person that I could have became. And I didn't necessarily admire the people that were in my company that were 20 years older than me either, that were close to retirement. In
Hmm.
fact, a guy that I worked with who I respected all the people I worked with. I have great memories with a lot of folks, and I miss working with a lot of them. I miss the people.
Hmm.
But a guy that I really respected, he worked till he was about 67 years old. He pushed it really hard. And, he retired, and 2 years later, he passed away. And it was really sad. And I thought to
Hmm.
myself, man, that's the worst outcome for me. I want to
Yeah.
live my life and design work around my life and my family first.
Mhm.
And that's really all that matters.
Yeah. I mean, there has to be a place for work, but I think too many people end up focusing on their work and not focusing on life. And I appreciate how you said that. I think you nailed it on the head. So let's talk about this 40 unit here. And I know, from talking with you earlier, it was kind of, there was a crescendo coming through. You started with that one, and then a two, and then a couple of other things. But let's just launch right into the 40, and maybe we can backfill things as needed. So,
Sure.
40 unit Evansville. How did you find this property?
I went direct to seller.
Hmm.
I had started to look outside of Indianapolis into tertiary markets for a number of reasons.
Hmm.
And when I decided I wanted to go larger, I started by contacting brokers and really wasn't getting much traction.
Yeah.
As a newbie to the apartment game, there wasn't a lot of credibility there. Even though I
Mhm.
had done some single family projects at that point, I actually had about 30 properties in my portfolio, but they were all single family homes and small multifamilies. So
Yeah.
that didn't really translate necessarily into credibility with these brokers. So I got a
No,
little
it
bit
doesn't.
frustrated and decided that, hey, I've got to figure some other way out to do this.
Mhm.
And I started just kind of driving for dollars, I guess you could say. I was trying to familiarize myself with the town a little bit more, and I would, drive by an apartment building and I'd see it and I'd say, hey, that's something I'd like to own. So I'd look it up and, find out who the owner was and see if I could search their LLC or their name on the internet and find a
Mhm.
phone number. I did that with a number of properties. The property that I found that I acquired, I got a guy on the phone who bought the property originally and then sold it on contract to the decision maker. And that
Mhm.
the person that had the paper was nice enough to give me the decision maker's phone number and talk to that person, and away the negotiations went.
Nice. Go back a second. Not many people I talk to are successful with direct to seller, campaigns. How many sellers did you talk with before you got to this 40 unit?
I would guesstimate probably about 25.
Okay.
Evansville is a relatively small town, so there's
Mhm.
probably 200 apartment buildings that are over 40 units or so.
Yeah.
So that's where I started. And when I got to this particular seller and this particular asset, and I started engaging in negotiation, that's kind of where it stopped. So,
Mhm.
but like I said, I wasn't getting much traction from the brokers. So it's an interesting thing. Now that I own this property, and it's only
Mhm.
been about 2.5 months since I've acquired it, the same brokers that weren't giving me the time of day or returning my phone calls now are looking up the property record and seeing that I'm the one that acquired this
Yeah.
property for this transaction. And now they're starting to call me and want to see if we can meet for coffee. So it's kind of an interesting thing in this business, how you gain momentum
Oh,
and
yes.
everything, it just accelerates.
We saw the same thing. I had several brokers, one in particular who we've since developed a great relationship with. When I first called him, I asked him to meet for coffee or lunch, and he's like, "No, nope, I'm not even in my office for 15 minutes." He's like, and he literally told me, he's like, "You don't have anything." He's like, "I work with owners. I don't work with, people who want to be owners. I work with the owners, and." When you're an owner, I'll meet you for coffee. I'll meet you for lunch. I'll meet you for whatever. And sure enough, as soon as we were owners, actually we were a couple of weeks out from closing, but he got wind that we were closing, and he reached out to us. And
That's awesome.
anyway, that's the nature of the game. The brokers want to work with the owners because the owners are where they're going to get their dollars. So
Yeah, there's a much easier path to a commission
mhm.
from a listing perspective versus representing a buyer, no question.
Absolutely. Absolutely. So great there. Now, you found this place in Evansville. You were driving for dollars in Evansville. You mentioned 30 properties prior to. Are all those properties in Evansville? Most of them? Where geographically is everything located?
Most of them are located in Evansville. Yeah,
Okay.
I'm home base here in Indianapolis. I had as many as 8 doors here in Indianapolis. I
Mhm.
sold a few of those off. I at one point it was really just 6 months after I left my job, my W-2, that the numbers just stopped penciling out the way that I wanted them to. I was
Mhm.
doing the Burr method and I was trying to recycle all my capital. So if I bought a house for $50,000 and I put 25,000 into it,
Mhm.
I wanted it to appraise for 100 grand. So I knew that I could get my 75 back out,
Yeah.
keep the 25% in as equity, and
Yeah.
then indefinitely roll that money into new assets. So as property values went up and rents didn't, that kind of went a little sideways and those numbers won't work anymore. So that's when I went
Yeah.
out to tertiary markets. Evansville, I was looking at a bunch of different markets, but I really hit it off with a property manager down there. I knew that was such a key component to investing out of your market,
Mhm.
that that's the first person on my team I wanted to identify, if you will. And when I met this person, he was a young guy. He was hungry. He understood the business from my perspective. They had a general contracting arm of their
Mhm.
business in house. So it really was a turnkey operation. So I started with one house down there just to try them out and see how it worked out. I found this via auction
Mhm.
and rolled it into their general contracting team. They did the rehab. I believe it was about $15,000. So it's pretty light rehab,
Mhm.
good kind of first step. And after the rehab was complete, they filled it with a tenant. They still manage the property today, but it just gave me kind of a track record to build off with them. We moved into another couple of properties, and then I bought a package of 6 single-family homes, and then a package of 3 single families and 4 quads. And the 4 quads were all vacant. They were pretty rough, very banged up, heavy lifts.
Mhm.
So this was the first real test I gave these guys, and they passed with flying colors. We crushed it with these projects. I'm really
Yeah.
excited how well these guys did with it. But this was going on during the beginning stages of COVID, so it was a little bit rocky,
Mhm.
and I was a little bit nervous, to be honest. I didn't know what was going on with rent moratoriums. Everything was up in the air at that point. This is March and April 2020, so we were wrapping up those projects, and the housing market was relatively strong, surprisingly, going into the
Mhm.
summer. And I thought, well, let's see if we can put these up on the market. They're going to look as nice today as they're
Yep.
ever going to look over the next 10 years or so. Most of the stuff is new, and got a hit. And we sold three 4-unit properties as a package to an investment group out of Atlanta. then I had a different problem. I had some cash I was sitting on. And as the months rolled on, I started to
Yeah.
get worried about inflation. So it
Yeah.
wasn't, that I was worried about rent moratoriums and all the issues that would come along with that. It was, now I got to protect my spending power.
Hmm.
So what better way to do that than get into real estate? Maybe I shouldn't
Yeah.
have sold those 4 units.
Well, you sold the four, you sold 12 and you ended up rolling that over to buy 40. I think there's a lot of really good, lessons learned from there. I've said three things, three things are important in your first acquisition. Being able to find a deal, being able to raise capital, and building a team. If you can do those three things right, you're going to do okay, and your team, what your property manager, I mean, you slowly built that relationship over a couple of years to where you were good working with them, they were good working with you, and so that gave you the confidence to get something bigger. You brought your own capital to the table in this case, and you hustled and hustled and hustled. Drove for dollars, called a bunch of owners, to find the deals. And I mean, I like how that progressed for you. It went slow at first and just gradually built, and now you're the owner of a 40-unit apartment complex with brokers calling you. So anyway, great story so far. So let's talk about just the process through the deal. Tell us about from there, first call to the seller, getting it under contract, if there's any issues there, and then we'll move from there.
Yeah. So, boy, that was a colorful couple months. Once I got it under contract, the seller was, I'd say, what you call a typical distressed seller. She had run into some health issues. She had really good intentions for the property. She had put some money in on the front end, but had run out of capital fairly quickly and just got kind of in over her head. But she was emotionally invested in the property and really didn't want to sell,
Hmm.
but felt as though she had to and it was the best thing for her. But I think with that, there came a lot of like rocky emotions on her end.
Hmm.
So, I guess one of the challenges is if you were working with a broker, you'd have that middleman in between you and the seller.
Yeah.
But in this case, I didn't have that. So I felt like a psychologist at some stages during the negotiation, a lawyer at other times during the negotiation. We had to bring in lawyers at a certain point to kind of mediate between the two of us. And I tried to stay level headed, but in hindsight, there were a few times where I kind of lost my cool too.
Hmm.
It was a difficult, arduous couple months, but eventually, we'd always come back on the phone and say, "Hey, look, you know, sorry for the last conversation. I know,
Yeah.
it wasn't as cordial as we hoped, but I think we both want the same things. I think we both
Yeah.
are,
I
good
want to buy
people at
it,
the end
you
of the
want to
day."
sell it. Yeah. So
Exactly.
yeah.
So we were able to work through those issues and still maintain a fairly good relationship. And we
Hmm.
still, keep in contact somewhat to this day when there's issues that arise where, if I have a question about the property that I'm not aware of, a
Hmm.
certain situation, I don't hesitate to call her. If she's got, a tenant that hasn't been made aware that she's no longer, working with the property, she'll
Yeah.
let me know on that end. So from that standpoint, it was, we're still on good speaking
Okay.
terms. But I would say those couple of months, it was difficult. But at the end of the day, we're able to close the property, and that's pretty much a week later we started a repositioning process.
Yeah, I think that's definitely one of the benefits of a broker, and people a lot of times, and I'm selling my personal residence right now. We close in about a week, but every time I sell a house, I look at that brokerage fee and I'm just like, oh my gosh, I paid them how much? But on the flip side, they save you from a lot of that stuff. And working through a commercial real estate broker, they save you from having to call 25 owners because they're doing it themselves. They save you from having to deal with, the emotionally distraught owner on the other side because they're doing that. So in a lot of ways, I think that's why we use brokers a lot. I think something you said earlier as well is, and we both talked about it, but brokers don't like working with the tire kickers, so to speak, or the people that want to be real estate investors. And I think it's very admirable that you started picking up the phone and dialing for dollars and saying, hey, this is what I want. I want to get something, 40 units or so in Evansville. So driving around doing basically skip tracing to figure out who the owners are and calling them up and figuring something out. So a lot of goodness there. It's going to be exciting to see what you can do now that brokers are actually, talking with you. So that said, let's go back to the deal again. So you little bit of a relationship with the seller, some rocky moments, some smooth moments. Tell us about the lending, the loan, what type of loans you guys get, and whether or not there are any snags there.
That whole process was relatively smooth. I
Mhm.
kind of knew what I wanted and was positioning myself when the opportunity came to have, a couple different lenders to call. So I had a community bank look at it and ultimately went with a local credit union. Was able to secure a recourse loan, 75% LTV, four and a quarter,
Mhm.
25-year amortization, 10-year loan fixed.
Mhm.
So, and they appraised it in its current condition, but they also gave a after repair value.
Mhm.
So I kind of knew where I was at from a value add standpoint, what the property would be worth before I even closed on it.
Mhm.
After I executed my reposition, but they're going to give me a quarter point back once I'm done with that rehab plan. So my loan will drop from four and a quarter down to 4%, which I like.
Nice. Nice.
And I considered the variable rate, but to me, this being the largest asset I've acquired, maybe I'd give up a little bit of return, but I needed to sleep at night, and this just
Mhm.
provided me a little bit more security and a little bit more confidence as far as what my returns would be.
Yeah, and looking over the last 20 years, 4% is a really good rate. I mean, if you extend, open the aperture, over the last probably 50 years, 4% is a really good rate. If you go back further, it's average. But anyway, so cool. And now 80% LTV, and you told me earlier it was a recourse loan. Can you tell me why you decided to go with a recourse product?
Yeah,
Or
well,
actually, let me rephrase that. Did that worry you at all?
I mean, there's always concern when you're on the
Mhm.
line like that, but I felt like a comfortable level of assets to back up the property if there
Mhm.
were ever an issue. One of the mentors I have here in town kind of turned me on to right away was always have adequate reserves and always have cash available.
Mhm.
So before I even closed on this, I tried to secure some lines of credit. I had liquid cash available, so if things don't go as planned, there's always that backdrop to fall on. So
Yeah.
that was one thing. But really, with this type of asset, in the condition it was in, at the price point it was at during COVID, there really weren't any non-recourse options available. It's a
Yeah.
little bit too small for like a Freddie small balance loan. And
Mhm.
even if I could get that at the time, I may have had to have, 65% LTV. I may have had to have, 9 months, 18 months of reserves for taxes, insurance. I mean, then I'm coming up with a lot more cash that is going to make the deal
Mhm.
not pencil out quite as good and leave a lot less money to go towards the rehab. So it really made the decision pretty easy for me
Yeah.
from that standpoint.
And I think you brought up a lot of good points, a lot of the benefits to going with loans like that. A little more flexible, typically a little cheaper as far as rates and terms because they're underwriting you as well. And for that space, it is hard to get the permanent debt. I mean, we do have one Fannie loan on a $1.1 million purchase, but I mean, you probably have the better loan than we do. But I mean, looking at it from higher up, I think you look at it as a whole project and evaluate it as a whole, which I think people should do. I've heard a lot of people say never get a recourse loan. We have four of them, but I think we're on the same page as far as that goes. You look at it as you in the entirety and make the best decision with the appropriate amount of risk. And looks like you've mitigated all the risk that a recourse loan brings to the table, and you should be on solid ground. So
I hope
our
so.
yeah. Well, I mean, that's part of the game, right? You accept a little bit of risk, you mitigate it, and you hope to make money, on the back end for taking on that risk. So
On
so
that point, there's
yeah.
so many benefits to multifamily, really, just generally speaking. I mean, when you talk about risk, trying to mitigate it, look
Mhm.
at cryptocurrency, you look at just even holding cash, you look at the stock market, you look at the risk of even holding bonds, which have been historically a very secure asset to hold. But as they move opposite of yields, prices do, or interest rates, I should say. So when it comes to other asset classes, you have a lot of risk that maybe you don't see on the surface because financial advisors will tell you, hey, this is what you should be doing. You should be doing
Mhm.
a 60-40 stock bond split, and that's going to get you to retirement. Well, in actuality, a lot of people just take that at face value and don't see that that's pretty risky in and of itself.
Mhm.
So, people get nervous about debt. Bad debt is something to be nervous about. But when you take on good debt that generates cash flow and you mitigate the downside with reserves, that's the fastest way to build wealth.
Something I've realized more and more of late is people are okay with the risks that they know of, and the risks they're familiar with. And you're right, throwing money in the stock market has a lot of risks involved, but we're told from a young age that you're supposed to do that. So you don't really look at the risks, and I think you say the same thing with the world's reaction with COVID. There's a lot deadlier diseases out there. There's a lot of things that kill more people every year. But because it's the new risk, people aren't ready to take on new risks that they don't know and they don't understand. And, we've seen that come to play, many, many different times recently. But, you took on a little bit of risk, you understood the risk, and you realize, hey, this isn't that bad, or I can figure out a way to mitigate it, and my risk adjusted returns are going to be worth it, because of the
Yes.
multifamily, because of, all the things that prop up the housing market. So, that said, let's talk about the first steps after. So you closed, you say about 2.5 months ago. What have you guys done from there?
Boy, we have a lot of work to do still, but we've gotten a lot accomplished as well. We had about $175,000 rehab budget. There was 30 occupied units and 10 vacant units. And the 10 vacant units really were vacant just because the previous owner didn't have the money to pump the capital and to get them rent ready. So that was step number one, to bring in some additional income. We wanted to get those units ready. We're putting between 7,000 and 7,500 per unit in. We should be able to get an 18% rent bump from prior rents.
Okay.
With those units, the classic units we're going for. So once we validate that, we've got a couple units leased up at our pro forma rents, which is great news. Once we can get all 10 rented, hopefully at our pro forma, then we may start to look at the other 30 and how we want to move forward with those. But the interior renovations were first, and then the exterior needed a complete overhaul as well. The gutters, so there were some water and drainage issues in the courtyard, so had to do some downspout extensions underground, and we're replacing all the exterior doors. The property was built in the 60s, so it's got kind of a dated look to it. And the doors are really going to spruce it up and give it some more curb appeal. We got landscaping to do. In a couple weeks, we're tearing out cast iron plumbing in the crawl and replacing it with PVC. So that's a big project and a big expense. Really the biggest non NOI generating CapEx item we have on our budget list here. All the common areas, we're going to clean those up, put new carpet, new paint. I think that encompasses the full 175 we're looking at. And we should be, from where I can see, we're about 100 into that right now. We might end up being 5 or 10% over, which for me, that's a home run.
Yeah. I mean, it looks like your all-in price is about 1.25. What was the ARV on the appraisal?
1.375.
All right, not bad. So, for what you put into it, I mean, you're going to have a nice little ROI just on the forced appreciation there, and then every cash flow from there on out is just gravy. So, well, what's next for you? What's the next step in your journey?
Well, first things first, I want to get this deal done. That's most important, and have proof of concept that this is something I want to do moving forward, and I want to continue to grow. But that's the goal, is to take it to the next level. I want to continue to do projects like this. I want to continue to provide affordable housing. I think there's a massive need for affordable housing, and there's also opportunity to make profit on it too. And that's really, those two things have to come together to make it viable. So I'd like to get into mid-size apartments like this and potentially do joint ventures with other operators, other investors. And if the deal's big enough and the opportunity presents itself, I'd be open to syndicating too. So I'm kind of positioning myself to work with other general partners and just kind of networking that way and seeing where things go.
All right. A lot of good stuff there. So, we have a lot of people who listen to this podcast who are, probably looking to JV up. So if anything he said is resonating with you, definitely, reach out to him and, go take it from there. So now here's my favorite question to the whole podcast. What advice would you give an aspiring investor who's 6 to 12 months behind you?
That is a good question. I would say two things, really, if that's okay.
Yeah.
Number one is to look at where you want to be in 10 years and work backwards from there. I think a lot of people go at it kind of chaotically, and they don't really think, oh, this will be fun to do. Let's try this. Let's do this. And they don't really connect the dots as to where that's going to lead them. So if you can really define, I guess, your why or what you want life to look like in 10 years, and then work backwards and not get distracted. For example, an easy distraction is I want passive income, so I'm going to build, through the Burr method, a single family portfolio. And then all of a sudden an opportunity comes up that doesn't fit your criteria, but it could be a good flip. So I'm going to try that. Before you know it, you're flipping houses and you just replaced your job.
Mm-hmm.
And you're not building passive income at all. As soon as you stop flipping houses, you don't have any more income.
Right.
So to avoid that, it's just to paint the picture where you want to be and work backwards from there. A great book that I read, I'm sure a lot of your listeners has probably heard of it, is by Gary Keller. The One Thing.
The One Thing.
The One
yes.
Thing
Also
by Gary Keller.
Yeah.
Yeah. So that book
Forgot
basically
he wrote
talks
that
about,
one too. But yeah, I've read that one.
Brilliant guy. He talks about how if you've got this big goal, break it down and think about the one thing that could make all the other things you need to do to accomplish that goal easier or unnecessary completely. And then keep asking yourself that question, and it really dissects that goal down into such minuscule bite-sized action steps that it makes it like, oh, this isn't so big and so intimidating that I'm never going to be able to achieve this. You just keep putting one foot in front of the other.
Yeah.
So I love that. But that is, and you always hear a lot too. I'd say this kind of transitions into my second point, and the second piece of advice I would give is that don't speculate. If you're trying to get into investing, focus on cash flow. You hear all the time, take action, take massive action, get out there and just do it. That's great. And I think that's good advice. But at the same time, don't get consumed with that idea that you just got to go out there and just take this big risk and hope it all works out. You got to educate yourself. You got to meet with the right people. At some point, you have to avoid what I did, and that's have paralysis analysis.
Yeah.
But buy properties at cash flow from day one if you're just starting out. Don't make these assumptions that all have to kind of line up and go right to make it a good investment, because assumptions lead to potential pitfalls.
Yeah, absolutely.
If you buy a property that cash flows, that has some upside, well, that's fantastic. And learn a few things along the way. If you want to speculate down the road in certain corners of your portfolio, then I think that's fine. But don't risk it all. It's not worth it. So stick to your criteria.
Something, and this is a military thing that gets pounded in our head. An unverified or unvalidated assumption is risk, is what that is. So if you go in with assumptions that are not validated, you are assuming risk. And the more and more assumptions that you have that aren't validated, the greater that risk becomes. Sure, you may eventually, you may once in a while hit a home run or get on base, but there's a good chance that if you pile on those assumptions, you're gonna have a hard time just keeping your head above water. So, all right.
So true.
So last question: how can listeners learn more about you?
Thank you for having me on today, Brian. It was awesome. No listeners can find me at redhawkinvesting.com.
Okay.
I'm also pretty active on LinkedIn, so please reach out to me and connect with me there.
All right, awesome. And we'll put a link to redhawkinvesting.com in the show notes, as well as your LinkedIn profile link, and that'll make it so if anybody wants to reach out to you, contact you, they can. And if you listened, he says he's looking to potentially JV with other people and potentially syndicate in the Evansville area. So, like I said, if that appeals to you, reach out to him, and maybe we can link people up. So, anyway, Paul, amazing talking with you. I think you've done some really great things there. Super impressed by the fact that you went from buying one property to tackling a 40 unit all by yourself. Not many people can say they've done that. So, my hat's off to you. I think like I said, I'm excited to see what you can do now.
Thank you. Thank you very much, Brian.